presentation, and which is with Mr. Vimal Kejriwal of KEC International. The company came out with numbers wherein the revenues were up 6.8%. Margins were in line with estimates, but the revenue number and the PAT number was slightly below estimates. In fact, the profit after tax, up 33%, but below estimates. Order inflow, though, was strong. The stock is absolutely flat. Vimal Kejriwal joins in right now to talk about the numbers and the outlook ahead. Mr. Kejriwal, good having you. Thanks for taking the time out. Mr. Kejriwal, the last time that I spoke to you, which was probably in May or June, right, 2024, you had said that in your 22 years or 23 years, you've never seen a better time for business. Does that momentum continue for the business? And did the quarter live up to that, or would you have hoped for more?
Good afternoon, and thanks for having me. If you look at the business environment, we are in various businesses. So main is obviously T&D, then we have civil, railways, etc. So as far as T&D is concerned, I think we still maintain that we've never had it better than what we have today. And that's reflected in the numbers, that's reflected in the order intake, and also the tender pipeline for T&D. Railways as a business is slow, is down, okay? And that's one of the reasons why we have not been able to increase our margin beyond the 7%. And civil, I think you know all what is happening on the private capex, especially, except for minerals, metals, and mining. We're not seeing too much on private capex. So, but T&D is 70% of my order book. So there, I think we are very happy with what we are seeing.
Okay. Does this quarter in any way, I mean, when I look at the quarter, on balance, it seems okay, but relative to the kind of standards that you set or the expectations that you've set, not a high single digit, but slightly above 5% or whatever, a mid single digit revenue growth, a bottom line number which missed estimates. Is this a case of stuff that will be done in quarter 4, which may have been done in quarter 3 but got postponed? How do you characterize that, the small miss that you had in the quarter, Mr. Kejriwal?
So Niraj, one thing we should understand is that we are an EPC company. So the revenue does not go away. If I miss something in Q3, it will come in Q4. If I miss something in Q4, it will come in Q1. It's not like a FMCG or something. If I lost a sale, someone else has taken it away. It doesn't work out that way. So I think you're right that whatever we have missed in Q3, and then we can talk about it, will come in, largely should come in Q4. And we are given a guidance of 15% for the entire year. I don't think we'll be able to maintain the 15% fully, but we've been talking about maybe doing 100 basis points, or maybe 13, 14 or 12. I don't know, but we'll not be very far off, but we'll have a very big Q4 as we can see. Okay. And if you want to look at what has happened in the quarter where we are at 7% rather than, let's say, being at 10%, one is very clearly the shortage of labor, which still continues. I think we are almost 4,000 laborers or technicians short of what we would love to have. And second is that we have a reasonably large water portfolio, and primarily from Jal Jeevan Mission, and there were hardly any payments coming in. So I think all the contractors had slowed down the progress. So we did lose a significant amount of revenue in the water, which was deliberate. I think hopefully in January we did get a lot of payments now, and we did see a mention about this and the funding for this in the budget. So hopefully the situation on the ground should improve, helping us in our execution as well as probably booking more orders in water.
Okay. When do you see some of these headwinds, sir, reverse?
Sorry, come again? Yes.
When, Sir Harsh also joining in. When do you see some of these headwinds reverse, sir? The labor shortages, some execution-related headwinds that you've just spoken about. When do you see those reverse?
So labor shortage is not something which will reverse very quickly.
Correct.
And it's an industry specific. It's not just a KEC specific or something. I think a lot of action is happening, which includes, and I think the problem is not of getting people. The problem is of retaining people. People just don't stay. And I think that's something where people, all the industry members, everyone is trying, the clients are working on it, saying, how do we improve the lot of the workers? What else can we do? So that as one part is what you can do to retain people. A lot of actions are happening. So it will take some time, but I don't think you can give a specific time, 1 month, 2 months. The second piece is, how do you increase productivity? How do you mechanize more? By which the need for labor probably comes down to the extent they are available. A lot of work is happening on the mechanization front. So I think in a couple of quarters, you'll start seeing the impact of labor getting minimized on the numbers.
Sir, you spoke about maybe falling a bit short with regard to execution for FY25 full year. You had guided for a 9 to 10% margin, guided for a 15% top line growth. Do you expect FY26? Will you catch up with regard to some of those metrics and execution? Is that something we can reasonably expect?
So, Harsh, today we have an order book of 41,000 crores, including L1. So, with that, it will take me some time, maybe at the end of quarter 4 to be more precise. But I don't see 15% revenue growth going anywhere. I'm very clear on that with our numbers and the order pipeline which we have. 15% at least we will be able to grow next year. As far as margin is concerned, I think I will wait for Q4 to end. Whether it will be 9 to 10 or whether it will be 8 to 9, I think it would be somewhere, I'll say, plus or minus of 9%. I think that's what I can say today. But maybe once, maybe in April, May or something, we'll be able to give you a more precise guidance. But I don't see the guidance moving too much from what we have given.
Understood. Thank you so much, Mr. Kejriwal, for all of that perspective, for coming in and speaking with us, and wishing you all the very best for Q4 and beyond.
Thank you, Harsh. Thank you. Pleasure.
Right. Let me also quickly ask Kush. Kush, I want to take your view first off with regard to KEC International. Before we take your picks for this afternoon as well, and also want to go to Nirav on what he feels about KEC.
Harsh, not a very encouraging move at all. The stock's actually been beaten down from those 1200, 1300 odd levels. Attempts of recovery have fizzled out around the 20-day moving average. I wouldn't really read too much into it. From a levels perspective, I think a good support zone comes in at the recent low that it's made close to the 750, 760 mark. If that is broken, the selling could further accentuate. So I will wait out this one. Not too early to call any kind of signs of revival on this one.
Kush, picks very quickly.
Sure. Two of them, both of them on the long